welcome. Here's our top story. World stocks plunged on Monday as US President Donald Trump showed no sign of backing away from his sweeping tariff plans, and investors bet the mounting risk of recession could see the Federal Reserve cutting interest rates as early as May. Donald Trump has brushed off the market turmoil caused by his sweeping tariffs, likening the measures to medicine as panicked investors continued a massive sell-off of global stocks. Digging in on his so-called reciprocal tariffs, Trump said he would not back down unless the other countries balance their trade with the US. The US president said that he had spoken with many foreign leaders over the weekend who were dying to make a deal.
To go down, but sometimes you have to take medicine to fix something, and we have such a horrible. We have been treated so badly by other countries because we had stupid leadership that allowed this to happen. They took our businesses, they took our money, they took our jobs, they moved it to Mexico, they moved it to Canada, they moved a lot of it to China, and it's not sustainable. We're not going to do it.
I'm joined at this hour by Neerah Shah, who's the executive editor of NDTV Profit. Neerah, Donald Trump has injected massive uncertainty into the world economy. What next?
Yeah, Rica, thank you for this. And the immediate point to keep in mind is a 4% downtick on the S&P 500. If indeed the S&P 500 were to close 4% lower, then this will be the first time since 1930, since the Great Depression, that we'll have 3 consecutive days of over 4% gash for the S&P 500. But, those numbers aside, I think all eyes out whether there is some bit of compromise that select nations have with the US before April 9th or no. If that were to happen, maybe there's a bit of a relief out here. If not, then it's uncertainty continuing for the time frame, continued near-term time frame. And independent of whether India is a relatively insulated economy or not, which it is, because we have 2% of our overall exports to the US. So it's not a very large impact on India from a macroeconomic perspective, but equity markets don't like uncertainty. And that is what they're getting in huge dollops right now. Suffice to say that might continue.
What the cool. Well, we are joined by Geoffery Dennis, who is an expert on emerging markets. Geoffery, Donald Trump has sent shockwaves across the world with his tariff slaps. Tell us, where do you see the US markets heading now?
Well, that's a very difficult question. I think unless anything changes from what we know so far, and obviously the big debate will be whether on April the 9th he will truly introduce all of these so-called reciprocal tariffs. I think the April the 5th announcement or apparent, introduction of the 10% base tariff for everybody, that was, I think, a given. The issue will be the reciprocal tariffs on the 9th. Now, if he goes ahead and imposes those, I think the selling goes on for a while longer. I think what's happening here now is you are in a position where the US is heading for recession without any question, in my view. And a typical pre-US recession sell-off in stocks will be around 30%. So we may be over halfway there, but we wouldn't be there just yet. So I think it all depends on what action comes from the White House. I mean, we got no respite over the weekend, as you've already said, no backtracking, no backsliding. And until we get some sense that he's backing off on some of these tariffs or doing deals with individual countries, I think you'll find the market is still going to be under pressure for a while. Now, what's interesting to me, if I can just say this one more thing at the moment, is that the futures were down 1,600 points at one point on the Dow early this morning when I first woke up. They're now down, quote unquote, only 900. So there may be some sense of the US trying to get bring some stability in here. But bottom line is you need something from Trump. Otherwise, there's no obvious reason why you would get much of a bounce.
Jeffrey, Neerah here, and thanks for joining in. Good talking to you at this hour. Now, China has retaliated. What if some of the other nations were to also show retaliation, even as some Asian countries are trying to negotiate with the US? If we see more retaliation from EU and some other countries, would that make the markets more nervous?
Yes, it would. I mean, I think the Chinese imposition of 35% tariffs across the board on US goods was really the confirmation that we are effectively now in a global trade war. And this, I think, surprised people towards the end of the week as well. Now, the amount of retaliation from other areas like the EU has been relatively limited. And I think that's probably because what countries would like to do is to reduce the temperature here of this trade situation as opposed to cranking it up. China probably feels it's got the economic power to crank it up. And that's a choice they're making. And I think that's maybe not a bad choice for China. But at the end of the day, if you were to see more countries retaliating along the style of China, you would just intensify the global trade war. And I think for a period of time, therefore, global stocks would continue to fall.
Can Asia enter? So the odds of the US recession went up 67% to 67% the last I checked at a private survey. Can Asia, because of the higher tariffs on Asia, also enter into a recessionary phase, stroke recession, Jeffrey?
I think it's done. We should look at this country by country. China is not in recession, won't be in recession, but it feels like a recessionary rate of growth. Obviously, they're trying to target 5% growth in 2025. The government, good luck with that. I think it's going to be quite a lot lower than that, probably in the 2 to 3% range. I think Taiwan is vulnerable because of the immense role of the chip sector in the economy, and also, of course, the role of TSMC in the Taiwan market, TSMC being the biggest stock in the emerging market index. Korea has got a lot of vulnerability to the US because of a wide variety of sectors. And as I've said many times on this network, I think India is relatively protected. I mean, it doesn't mean to say the growth won't be perhaps a little lower, but I do not see a recession in India. And reasons for that would include limited trade ties between India and the US compared to other countries. Clearly, Modi, I think, would like to stay in good terms with Trump, and I think that would be something that could lead to some sort of a deal. And also, of course, we're getting a weaker dollar, which will help stabilize the rupee. And we're getting massive drops in the price of oil, which are also very good for India. So I think India not going in recession. Taiwan could be the biggest risk. China, I think, slows down sharply.
Jeffrey, a point well noted. Oil, DXY, plus the Reserve Bank of India is on an overdrive when it comes to giving the support. The question, though, is can India suffer? Can the Indian markets suffer, even if the economy does not, and probably corporate earnings do not suffer too much?
Well, I'm not saying the Indian economy won't slow down a bit as a result of all of this. I think it probably will see lower growth than would otherwise be the case without this mad trade war that's going on here globally. I'm just answering your question directly. I don't see a recession in India, but if you were to get a slowdown in GDP, that would put a bit of pressure on corporate earnings. And frankly, when global stock markets are selling off, sort of across the board, I think India would be very lucky to escape that. Now, I think India, and it's not much talked about at the moment, I think India is a low beta market in emerging market terms. It didn't go down anything like as much as Hong Kong did overnight, or Taiwan, or even Korea. Having said all of that, and this is a slight change of subject, if you forgive me, is that the area of the world that appears to me to be most protected from all of this is actually Latin America ex-Mexico, because those countries have only got 10% tariffs on them. So I think you'll see some investor money heading towards Latin America at the margin. But I don't see any reason why. I think the Indian market will remain under pressure while global markets continue to fall if they do so, and but still in a more controlled way, if that's an appropriate word to use in these crazy environments.
Yes, but Assuming, Jeffrey, that we do not hear any signs of agreements in the next 2, 3 days, and because including the S&P, a lot of markets have sold off quite a bit, do you foresee a pause to the selling, even if we don't hear conciliatory statements, or do you believe that the selling, whether it will not be 10% or 8%, but it could well be 2, 3%, but do you believe downsides will continue?
I think the downside from here is probably relatively limited. I think even in the US, even without any pullback by Trump on these tariffs, I think we are probably 5% from the bottom, maybe something of that order. I mean, after today looks like another weekday. So I think we're somewhere near the bottom because at the end of the day, I think it's going to create some opportunities for long-term investors to take a look forward and say, I'd like to, do some buying. But at this point, without there any break in the news from Trump and the White House on these tariffs, without there being any obvious signs of a quote unquote deal between some of these countries and the US, it's not clear what's going to stop the selling at this particular moment. Now, having said that, the pressure is on the Federal Reserve without any question now. Now, obviously, tariffs are inflationary. The danger is going to be, remember the word transitory, the danger is going to be the Fed is going to say the tariff pressures on inflation are transitory. Maybe there will be, maybe not. They certainly will have an upward shift adjustment to the inflation rate, to the CPI. But I think the pressure's on the Fed now to cut interest rates. And you've got to believe, I think, that we may be heading for 3 to 4 rate cuts this year as opposed to 2 rate cuts. And were that to happen quite quickly, although the next meeting's not until May, I think that would be something that could stop the selling. But what you really need to stop the selling is signs that either he doesn't put these reciprocal tariffs in place in full on Wednesday, or you start to get deals with certain countries to take some of the tariffs off or reduce them in return for hopefully these countries reducing their trade surpluses with the US.
Last question, Jeffrey. Because we haven't quite, a lot of people drawing parallels to how damaging COVID correction was, but it was a swift pullback because central banks acted in coordination. This time around, that may not or will not be the case. That also exacerbates the pressure on risk assets like equities worldwide.
Yeah. I think the parallel with COVID is interesting because of the scale of the losses and the speed of the losses. But as you say, central banks acted in a coordinated way. Plus, of course, there was massive fiscal action, particularly in countries like the US and also in China in response to COVID. So I think the scale of the sell-off will be probably in the end not much different from COVID. But I think the recovery will probably be a little slower because the central banks will not know whether to move quickly or not based on the inflation story. And also, there will be ongoing headlines, unfortunately, seemingly every day forever from the White House on trade, and we just don't know what those headlines will be. But, 5% lower than here, 6-7% lower from here, I would be a big buyer. Right. I'm just not sure quite there yet. And the next big day will be April the 9th, Wednesday, to see whether those reciprocal tariffs go on at all or in total or only in part.
Indeed, Jeffrey, thank you so much for joining in. Geoff Dennis, ex-UBS, tracked emerging markets so closely for so many years. So the perfect voice to have in such a situation, Rica. Over to you.
Thank you very much, Neeraj, for getting us all those details.